everybody. Drew Dosek here with Verified Investing. Today, we've got a lot of hot commodities to talk about, guys. Everybody's been focused on oil during this conflict with the U.S.-Iran situation. And then plus gold, silver are also making big moves. We're going to cover those plus nat gas, and I'm going to throw in another one with cattle. We're going to take a look at cattle as well. I don't know about you. I love to eat some steak, and cattle has certainly been very expensive over the last year or so. So that is certainly something to keep in mind when you're headed to the grocery store. First up, let's take a look at oil. Now, oil, what's amazing here about oil, guys, here was when the conflict really reached its pinnacle, at least for now, right? Because we have a deadline coming up tonight. We created this daily topping tail on the charts on March 9th. Since that point, we haven't had price get above that topping tail. Yes, we meandered up to the top, but this is classic inside bar price action. This is all bearish. Notice when we did make this topping tail, we didn't rocket back up and start consolidating right here at the top. Instead, we consolidated sideways in a bear flag manner, coming up to the top end of this range, all inside this candle before selling off further. And to show you where this yellow trend line comes from, I'll back out a little bit further on the monthly time frame, and that's connecting this pivot high back in July of 2008. And I actually strung it through this pivot high, but I made sure to include the high price point from the month of June of 2022. And that's where price action pierced and then stopped and came back in. So now we find ourselves outside of this inclining parallel channel that was highlighting that bearish price action. We've broken down underneath it and caught support at $79.77 right now, putting in 2 days of consolidation. So we get to the hourly time frame, and here's where really we start to break down near-term intraday resistance levels. Now we've gapped up over this was resistance at 86.46, but you can see how price is consolidated right on top of that resistance after moving up and is continuing to push up higher. Now the next intraday resistance is going to come here at $91.05. Another intraday level of resistance is at 95.25. You can see where I derived both of those. Those are both key low pivot areas on the charts that also correspond with future price action, either halting and bouncing on that level or getting rejected, much like what we see price action did here on April 16th. Now, please note, those are two intraday levels. Now, if we have some sort of big decision coming tonight, then you're going to be looking at these larger levels where I've got resistance displayed on the chart. 97.32, $104.34, and then 107.48. To the downside, here's a level in the sand to beat, 79.77. So we have good news come out of the meeting tonight into tomorrow. We likely will start selling off further. 79.77 and 75.07 are the two levels that I'm paying attention to in the most near term. Now, next up into nat gas. Now, guys, I've been talking about nat gas on Trading the Close nearly every day, and I've been talking about this $2.71 level to be hit, waiting for it to be hit, and it finally was tagged this week. Now, the longer it took to get there, I was less excited about a bounce. I was anticipating potentially us chopping sideways and then going further lower on the chart, setting up a really good buying opportunity for you. Reason being is a couple steps, and I'll show you on this chart. All right, so first up, here we have price breaking this inclining parallel, and price has recently come, tagged, and pierced this support level of $2.71. Now, for this bounce to gain any traction, I'll flip to the hourly. You can see I've got a couple sets of trend lines, much like on oil. If we can get a daily close above this trend line at $2.82, that initially starts increasing probabilities for us to continue up moving higher in this very near term. Next level of resistance there would be $2.90. Now I back out to the daily time frame, and you can see both of those trend lines still don't get us out of the woods. Instead, it puts us in a very nice V-shaped recovery, which likely would produce more consolidation. So a couple steps to go. First today, let's see if we can get a close above this first trend line at $2.82. Then that starts putting probabilities more in favor of consolidating and potentially breaking to go higher. Now, the reason I bring that all up is because we're on the verge, if we do hang out lower, of going down to test $2.41. Now, let me pull you back out to the weekly time frame. You can see here, this has been a very nice inclining parallel channel for nat gas. We briefly breached it here at the beginning of this year, got back inside. Then you can see here, we fought to get back in and keep getting rejected right here in this area. So whenever you break an inclining parallel, you generally break to the downside like what we see. And all the while, we're just catching support from price back in August of 2025. We've hit on it now several times. So I'm anticipating, as long as in the near term, we don't start pushing above that V-shaped recovery and consolidation area I pointed out, that we actually could be due for a little bit more downside. The next level at 241 comes right here around the high pivots back in August of 2024. Now, guys, we could go lower on that gas. Beyond that, we're talking sub $2, $1.92. This is the Widowmaker for commodities, because it can have very violent and quick price movements. So whatever levels you choose, because I've given a lot for conservative as well as aggressive levels. Whatever levels you choose, just beware to go lighter in share size. That way, if you do get blown through with these levels, then you can simply pull down your dollar cost average. And then that way, once support gains traction, you'll be able to get into the money much faster. As we've seen, this has some violent whips. You don't want to be stuck in one of these positions in nat gas, getting into margin call scenarios. And so you always zoom out so you can see, what if I'm wrong on this level of 271? How much further can it go past this 241? Well, as I've illustrated, we could come down here to the 2 and even sub 2 at this low pivot on nat gas. So that's all a possibility, especially during warmer months too. So it's something to consider when trading nat gas. All right, next up, gold. Now, a couple different things. Mainly, I've got daily support levels displayed here on the screen. They're not intraday. Now, intraday, we're actually going to have some support should gold continue selling today, right down here at the $4,700 level. You can see that was a high candle close here on March 31st. And then notice we've really chopped sideways with a lot of buyers with all these wicks generally in that area, which is why if that level intraday, after it potentially can bounce, if we do come back through, this bottom level will be support right on the top of this consolidation in the bottom of the pivots that we just highlighted. So you can see, though, I've illustrated most recently today's price action. This has broken the current uptrend for gold. So near term, that's not good. If you're a bull on gold, you want to see price get back above this horizontal trend line at $4,800. And most importantly, get back above this inclining trend line. That will put you on a right trajectory to go and attack the bottom end of this parallel channel at $5,165. Otherwise, near-term trend is beginning to be broken. Watch tomorrow's close. Do we close beneath this candle? If so, that tells me then any move up will be into resistance on that trend line. So this is pretty critical next 2 days in gold for the near-term price action. Overall, the larger-term price action is two symmetrical bear flags. You can see that big bear flag right here, move down, sideways chop. Then we had to move down, sideways chop. So we've got two bear flags on the chart of gold, all telling me the likelihood, especially now with this breaking, for more downside is higher than more upside. And one of the reasons is because the increase in cost of oil, a lot of central banks around the world that are stressed trying to get oil are actually selling their gold to buy oil. Thus, you see some selling pressure even entering today, where there could be a decision underway tonight. Next up, we've got silver. Silver also putting in some pressure today, coming down back on the charts. This actually was acting a little bit stronger on the chart compared to gold. Notice we put in these nice 3 wicks on these 3 trading days, April 2nd, 6th, and 7th. That implied there were some good buyers in this range wanting to push price up near term. That has been accomplished. This is the line in the sand to ensure we remain bullish near term on silver. And I'm very near term when I say this. This is a larger pattern bear flag. But if you're a bull on silver near term, you want to see this level 75.33 get held on a daily closing basis. If it does, then we can still consolidate in this range. That would all be inside bar price action, and then a potential move up to $84.18. If that level breaks, we're likely coming back down to this inclining trend line at $66.58. You can see we've hit this now several times. This is a trend line back from August of 2025. You can hit once, twice, 3 times, 4 times, 5 times. This next hit will be the 6th. Every one of those hits weakens that trend line and can open the door for more downside. So with this being the 6th hit, be watching for that possibility. Next major support on this 50% area of the parallel, right around $58, right down here to this fib retrace level at 55.09. All right, last up, guys, on cattle. Now, cattle, as you see here from this year, and really just since March, has been really ripping up higher on the charts here and putting in new near-term all-time highs here on cattle. As you can see here, we pierced above and have sold right off. So what that tells me right here is this trend line is the line in the sand to beat to go higher. Now, yes, again, much like last chart, we've only hit this trend line now twice, counting this one as the original hit, and then this collectively is the second hit. But ultimately getting rejected and now testing the support from these pivots back here in February of this year. If the selling continues, the next major support where I could see a potential bounce happening is at $2.36, right here on this 50% area of the parallel. And you notice this parallel is more geared toward near-term price action. It strings right through these pivot highs perfectly. It also has a really good bottom level of support. Plus, this 50% area has been respected every time prices approached it in the past. So I anticipate that being the same thing. If we do have price come down a little bit further, then the next support gets a little bit more intricate. As you can see here, I connect over through price action, this low pivot to these low pivots, which also happens to hit this low pivot. So once and if cattle can get in the lower 50% of this parallel, this will be the destination, this trend line right around $2.21. There will be pauses along the way. There will likely even be support, potential bounce right here at 225. But at least that maps out what I see near-term price action could be with a further decline. Obviously, to the upside, this trend line, as I highlighted, $2.48. Followed by this inclining parallel at $2.60. Those are all the break points for which I see people can take trades and take advantage of this price action in cattle. All right, guys, that wraps up the charts here for commodities today. Thank you guys so much for watching and tuning in. As you guys have taken and understood now, we've got a lot of great pro charts for free for you guys to get and gain insight with technical analysis on all of these charts. Thank you guys again. I'll look forward to having some more charts out to you soon. Until then, you guys take care and I'll see you guys on the charts. Take care, folks.